if MicroStrategy is included or any other DAT is included, then you're getting indirect access to cryptocurrencies via S&P index, which I think is really, really interesting. That's never happened before.
And also coincidentally, it's also one of the largest underwriters, which could have a lot of synergistic nature of it with the overall blockchain ecosystem.
And the idea that you're paying for security is kind of a meme. And so he also agreed that these staking yields were going to come down. But he followed that up by saying, look, with these digital asset treasury companies, that was sort of false.
What the actual state of these ETFs are, the injective ETF, the staked ETFs, the Pengu ETFs, the Litecoin, Dogecoin, etc. I know that you guys have filed a ton of them. Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Welcome to the show. It's good to have you guys on.
Thanks for having us.
Happy Friday.
Absolutely.
Happy Friday.
Guys, congrats on all the good work and the first US staked ETF and filing that with the SEC. This is something that I think we're going to see a lot more of, and you guys were pioneers in this place. So congrats on that. What was the experience like kind of working on this project that's a little bit less familiar of a structure than maybe some of these other treasury companies and other ETFs are working on?
Yeah, well, maybe I'll start off by talking about the ETFs and then hand it over to Eric to talk more about the treasury companies. But I've been involved in ETFs since really around 2009. I was an institutional money manager, mostly managing insurance companies and sovereign wealth funds and pension funds and the like, and hedge funds. And the firm that I was with at the time decided that we were going to buy an ETF company. So we went out and bought a Ridexx and Claymore, put them together, and I became the portfolio manager for all of that, and decided we would launch our own flavors of things. So I'm actually used to attempting to launch and launching very esoteric style offerings in the ETF world, even in traditional finance. So launched the first asset-backed security ETF, did the very first Build America bond, if you remember that. And of course launched other products around that. So some of those took a long time. It just takes a lot of patience and grit, and some of them are easier. So when the last firm I started, which was Valkyrie, we filed for the some of the first Bitcoin related ETFs. We launched the first Bitcoin futures on NASDAQ, Bitcoin mining companies, and then of course we were one of the many of Bitcoin Spot. And we're always looking for unique angles that the market might be interested in, might be looking for, that doesn't exist, and that's really where we're focused. So, for instance, when all the ETH ETFs began to launch, we just didn't think it was going to be that compelling unless you had staking involved. So we decided to bow out, let BlackRock take all the gains. And then, of course, when we started Canary, we took a big risk. We didn't know who the president was going to be, what type of administration we were going to have, what the SEC was going to be like. But we decided that we were going to plow forward anyway. So we filed a bunch of the early altcoin ETFs last year. One of them, of course, being staking. So we try to incorporate staking in every ETF that we file that allows staking. We think it's a very important feature of the network. We think it's a very important feature of the coin itself. And of course, it's an extremely important feature for investors that want access.
Yeah, most definitely. I mean, I think that I'd like to get into some of the nuances of how you guys are thinking about liquid staking versus, validator withdrawal queues, these types of things. But Eric, just want to give you a chance to kind of put this from the builder perspective, right? Launching an ETF, trying to, get these things, filing an ETF, trying to get these things moving to open up the type of capital allocators which can allocate towards something like Injective or the INJ token. From your perspective, kind of similar train of thought, how are you thinking about the ETFs for token projects, staking, etc. What is your frame of reference for launching these types of things?
I think for us, there's really two ways to think about it. One is, more on the technical aspect of things where we had to do a lot of work to support these type of product and making it much more, institution forward and friendlier for a lot of these platforms and issuers and, institutions to be able to, hold and be able to, mobilize these type of like stake tokens. So one really interesting part is we decided to create like a specific, feature slash module in anticipation for the ETF and also for the most recent DAT dedicated towards INJ, which allows for the transfer of staked INJ positions between addresses, so that different types of escrows can be moved amongst them freely, and it also allows for kind of like the skipping over of onboarding period for the list of like different types of like stake INJ amongst various whitelisted permission addresses. And so that's really cool feature that we did to like support kind of like all these features in anticipation for the institutional adoption. And I think as an ecosystem and as a blockchain, especially in this extremely innovation forward type of administration and this political landscape, we've just been doing our best to be able to support, to be able to push forward with a lot of these very innovative products like the staked ETF, and on top of that the DAT that's recently launched as well. Overall, it's just extremely exciting time for us, and we've just been keeping our eyes peeled with the overall progress for the commentary period for the INJ stake ETF, as well as like the announcement from the Pineapple Financial.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50+ trading pairs from crypto to TradFi, you get the best experience on-chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today. Yeah. It's pretty interesting times in the world of financial engineering. And Steven, I must say, in response to what Eric has kind of laid out with regards to these treasury companies, I think a lot of people in the space were surprised at the way in which that this kind of market cycle, if you will, has played out. You mentioned that when the Ethereum ETFs came out, you thought there'd be little demand for those outside of just, without staking, let's just say. And, I think a lot of us thought that a lot of the demand for the market to move this cycle, let's call it 2 years ago, was going to just come through these ETFs, was going to come through these 401ks. Really, I mean, what Eric and a lot of others have realized is that a lot of the demand is actually coming through these more treasury type vehicles. You guys at Canary have, I don't know exactly how many, but probably upwards of a couple dozen ETFs filed for various assets. And I think a lot of us in the market are kind of waiting on the floodgates to open, right? A lot of us haven't really been able to participate in that. Also, they've only really affected the top couple assets in a meaningful way, at least up to this point. What I'm getting at here is I think a lot of the community is curious from your perspective what the actual state of these ETFs are. The Injective ETF, the staked ETFs, the Pengu ETFs, the Litecoin, Dogecoin, et cetera. I know that you guys have filed a ton of them. What is the state of these? What is it going to take to actually get these through? And would love to just understand if you had an estimated timeline as well, or any predictions and thoughts there.
Yeah, look, I'll give a guesstimate because the reality is I know nothing.
Okay.
But the bigger reality is I know some things. And what we do know is that the exchanges have filed for generic listing standards with the SEC. That is going through a public comment period. They're going through revisions as we speak. And there is an expectation in the market. This isn't for certain, that those generic listing standards should get approved sometime by the end of this month. And then the SEC will work on ways to actually open up for tokens that qualify under the generic listing standards to be launched in an ETF. So my expectation is probably sometime in October is the right date for anything that has a current U.S. futures market. So that's the first stage of these generic listing standards. There were conversations earlier for other qualifications that were more quantitative, such as market cap and trading volume in the US. And it seems like that has been put on hold for now, but there is an expectation that those more quantitative measures will probably come out, 3 to 4 months after the first round of generics come out. So look, if you just look at CME, Coinbase, those are probably the two biggest markets for futures for crypto. Anything that's been that's had a futures market for over 6 months would qualify once those get approved. So again, my expectation is sometime in October, maybe pushing into November, and then next year, probably in the spring, is when we get the new standards, which would include a lot of the other things that we're working on.
Very cool.
That is an accelerated timeline.
Exactly. Well, in my opinion, I mean, I'll just say this: there's a few things that probably should have been approved a little earlier. But it is what it is when you're working with the government.
Yeah, we've seen that. I have a question kind of for both you guys, but I'm sure you have some unique perspectives on it. In staking in general, we had a live stream actually at Permissionless in New York. We had asked a couple of really smart guys, Tarun from Robot Ventures. He sort of explained, look, we're seeing staking yields go down across the board. He said he was bearish on businesses that were built around staking revenue, LSTs, protocol validators, but very bullish on businesses bringing stablecoin demand and companies on chain. But the staking yields were coming down quite a bit. And then his buddy over at Dragonfly, 𝗵𝗶𝗴𝗵, agreed. He said, we're going to go downhill from here. Staking mania was a bit of an illusion. And the idea that you're paying for security is kind of a meme. And so he also agreed that these staking yields were going to come down. But he followed that up by saying, look, with these digital asset treasury companies, that was sort of false. And in fact, these companies are making quite a bit and increasing their MNAV as a result of staking yields. And so I'm curious, Steven, from your perspective with respect to these ETFs and particularly these staking ETFs, and then Eric, just generally the builder's perspective on the chain, where do you guys see staking yields? Are they trending down, or is there enough demand from these treasury companies and these ETFs to really keep these staking yields alive?
Go ahead, Eric.
Yeah, so I think one of the most interesting part about a lot of these like LSD type of protocols and LSD product is that they're typically extremely utility focused. They serve a very a precise and interesting value proposition for a user, and it's typically like I said, smart contract that's typically open source, etc. So it makes it so that like it becomes a very, very competitive field because there's no specific differentiation between different types of LSD protocols. So it could be like a kind of like race to the bottom. There's not necessarily like a mode or network effect between a lot of these kind of like staking protocols that are happening on chain. And if a user wants to migrate, it's honestly maybe a waiting period at most, but it's honestly just a transaction way. This is very different in terms of what the ETF space is trying to offer and what a DAT space is trying to offer. Because first of all, it has a very distinct advantage of kind of like this differential capital flow between the institutional capital flow, wrapping it under like a compliant and regulated product to interface with the general public, to the general like investor crowd within like a traditional financial rail that they're used to. And this creates a completely different kind of process and access, which gives it a significant advantage and obviously like value proposition that can't really be easily beaten by just another like commoditized protocol. And I think that's really like the differentiation here is that like staking yield is probably going to collapse and the fee for it is probably going to kind of like compress over time. But that as a product that's being commoditized versus an institutional product that's being where there's a lot of effort going into packaging it into a compliant kind of like structured product or compliant, like offering to be interfacing with, like a massive set of traditional investors. That's a completely different type of product we're seeing. It's the, expanding access. It's the, grow the influence of, or, like grow the kind of like the beauty of crypto to a bigger investor base.
Mm-hmm. So from that lens, then there are still these structured products or these kind of financial rails that provide yield on a token like Injective, which are interesting to a subset of investors. You're saying that basically this concept is still somewhat new enough or interesting enough from their perspective to want to allocate to these types of investments then?
Yeah, exactly. I think, and I think that's why it's so very, very exciting. Because at the end of the day, like it's almost like saying like bridge protocols can be commoditized, which is certainly not the truth. Bridge protocols have like a very, very strong moat. It has basically like a network effect as it congregates more like a usage and flow and like like a TVL. And basically, a lot of these products are like the bridge protocol, where they bridge between the Web3 / like DeFi world with the TradFi world, and obviously as it expands in size, the moat just becomes stronger and stronger and stronger, and therefore it becomes a very powerful and very long-lasting moat.
Steven, do you agree, disagree with some points? What are you seeing on the staking demand / yield side of things?
Yeah, look, I think there's a ton of demand for the staking, and I actually find it quite interesting. My previous background was more in fixed income, so I completely understand that a staking yield is indeed in some ways income that you get for holding onto an asset, and that's something you don't get with everything, right? So you don't get that with fine art unless of course you lend it out. You don't get that with a lot of things unless you lend it out. But for equities that have a dividend or fixed income or a protocol that you actually earn the yield for the transactions that occur on the protocol, those are all very interesting, and people love yield, right? So when you have, for instance, the difference between an ETF and a DAT is, in a DAT you're investing in the business of the yield, right? So in an ETF you're investing in the yield itself, and you do have two different types of investors investing each one. ETFs are mainly, it's a big financial advisor type instrument because it's pure, it's clean. A financial advisor might put their clients in a portfolio of 90% ETFs with maybe some mutual funds or direct stocks or even a direct fixed income. Whereas a DAT is going to be probably a lot more retail, a lot more fast money or hedge funds. And then, of course, institutions are going to be split between the two. They may not have it in their mandate to own an ETF, but they might have it in their mandate to own a corporation that has a treasury. So, or vice versa. So you really are looking at very little overlap in the investor, but you're also investing in two different structures. And I like both structures. They both accomplish a different goal, right? I kind of mentioned already with ETFs, it's going to be you buy it, you have direct access to underlying. It's probably a little bit less expensive, and then you get a yield out of it. The DAT is going to be a lot more speculation on not just the token itself or the yield itself, but also the discounts and the premiums. So right now, most of the DATs are trading at premiums. I do believe they're a point to where they'll trade at discounts, and they'll keep going back and forth. It's just the nature of capital markets. So whether it's a closed-end fund or an equity, I mean, there's a lot of companies out there that trade it below their book value. And right now, DATs are trading above their book value based on the understanding that they'll likely utilize that book to issue more shares to buy more of that book, right? So that is really the play right now. So it is a very different instrument that does different things. And if you look at something like MicroStrategy, it's very possible that it's included in the S&P where an ETF cannot. So that makes it a really interesting play when you start including these treasury companies there.
What do you think are the knock-on effects of MicroStrategy getting added to the S&P?
Well, I'm probably the biggest doubter out there, that's in crypto that'll actually get added. And one of the reasons why is because its operating business is now such a small part of just the overall income of the company, and a large portion of that is Bitcoin. Whereas on a DAT like, for like Injective, for instance, you actually have an operating company that operates validators, that does active things, with its treasury to create value and to create income. So in and of itself, it is an operating company. It's a tech company. So that's what I like about something like that. I think that's probably a little bit more of a fit for an index like the S&P if some of these get a little larger. But look, the knock-on effect is this: if MicroStrategy is included or any other DAT is included, then you're getting indirect access to cryptocurrencies via an S&P index, which I think is really, really interesting. That's never happened before.
It certainly hasn't, and I think that the next order becomes these ETFs. If we follow your timeline that you've guesstimated for us, by the end of the year, we could have mom and pops buying cryptocurrency ETFs in their favorite, and I think this opens up a whole new horizon. And Eric, I think just as well as us, there's only so many injective ninjas out there, or warriors, or whatever you guys call them. There's only so many folk in crypto Twitter left. There's only so much liquidity that we've kind of got here in our little bubble, and I think the next step is really getting that next phase. I think there's a acronym called Henry's. It's like something not rich yet, but it's like these
high earning, not rich yet.
There you go. That is kind of like the next big target, I think, for a company like Injective. So question for you becomes, let's say we follow Steven's timeline, we get a staked Injective ETF, we get an Injective ETF. Obviously, you've got the $100 million pineapple DAT for INJ. But I'm curious, from your strategy perspective of expanding, distribution of the token, how does your strategy as a protocol CEO change once an ETF is live, right? There's this massively new market of available buyers who may listen to a finance podcast, or may subscribe to a newsletter in this category, or they might go to those meetups. From a marketing, from a strategy perspective, how do you envision Injective kind of getting into those Henrys?
I think overall, first of all, it's just about having an amazing team and just do what we do best. Keep doing our job and building and expanding out the protocol, and kind of approaching and growing the DApp base to be much more kind of general facing, to be a lot more consumer friendly, to onboard a lot more users that are not necessarily completely crypto native. And that's the work that we've always been trying to do to create the best possible financial infrastructure for that. And then on top of that, it just means that our work gets more intense and harder to try to advertise, to try to put ourselves in front of a much broader user base, much broader audience, and making sure that we're being considerate, and we're trying to make sure we're getting enough face time in front of different types of channels and different types of avenues. So overall, it's just about more work for our engineering side and more work for our BD marketing side.
Yeah, Eric. So if I may, man, then in that case, right? I mean, in our show, we're taking it more into this institutional realm, getting this type of audience, trying to grow that, and trying to provide that kind of bridge, as you say, in a different way, right? You're talking a lot about bridging in a financial way. We're talking about bridging in an educational way. But when it comes to your pitch to institutions or to Henry's, if I may, entertain us here with, what is the Injective pitch to institutions? What is the institutional appeal for Injective, and what is the appeal to these Henrys for why they may want to consider investing in Injective?
Oftentimes we like to let the product kind of speak for themselves. But typically, if this is a institution that doesn't necessarily have a lot of knowledge or experience about DeFi, or about crypto in general, which has been predominantly the type of conversation that we have to get really, really used to these days. It's really about framing Injective as a finance forward blockchain that houses kind of like the next iteration of the financial stack, being both extremely performant and at the same time extremely kind of focused on different types of financial rails, on different types of efforts, including tokenization, including like different types of consumer use cases. So we are taking care of both as an enterprise use case and as a consumer use case, both at the same chain. And that's really like what we're trying to pitch to different types of institutions. It's about kind of like bridging both, being like the nexus of like financial activity for both institutions and the general like everyday consumers in the same place, and doing that within like a blockchain infrastructure.
I got another follow-up question on the staking side of this. My understanding was that there was no staked ETFs that were live, and so I just did a quick search, and it looks like there is a Solana ETF that also offers staking, but there's still no Ethereum ETFs that offer staking. How are you guys able to get this through, and why do you think the other ones are getting held up?
Yeah, look,
Steven's on mute, but
yeah. Well, look, the ETH ETF, a lot of the issuers have applied for staking, and it looks like it will get approved very, very soon. The Solana one is sort of tricky. The one that's out there, it's not a true ETF. It's a 40 Act that holds it holds other ETFs and other things. So it's not really direct Solana. So that one doesn't really count. But we do expect that when the generic listing standards get approved, it's going to approve staking across the board. So we do fully expect, for instance, we've got a couple of other ones on file, and one of them, will probably be the first one here in October. So we're kind of keeping our fingers crossed there, but we fully expect that next batch to include staking if staking is available, and then of course, all the subsequent ones will have staking day one.
Makes sense. Quick, another follow-up. This is aside from the ETFs. I think we're kind of flip-flopping between the ETFs and the DATs here, but I saw an absolutely ridiculous proposition of a DAT to invest in other DATs. Like, how? I mean, this just screams mania, but I'm just curious from your perspective. Like, I think you're generally bearish DATs, but just explain to everyone else like what this could possibly mean for like the MNAV of a company that is betting on these other MNAV. Like, this is just an accelerant to what these more vanilla DATs are doing?
Yeah, look, and to be clear, I actually am bearish on a lot of the DATs that are out there, but I'm bullish on the concept in general. There's a lot that have been done wrong, and there's a few that have been done right. So, for instance, there's some out there where, the managers are charging anywhere between 3 and 5 points to just basically hold a token for the company, which is not market. It's absolutely ridiculous types of fees. The ones, anything that's like more in the realm of like 1% is reasonable. There's also a lot of DATs where they rewarded people with, a lot of warrants, and I mean, there's a lot of hands in the cookie jar on a lot of these things, and I think it's all going to blow up in their face. But then of course there's some that are very clean, like the one that we worked on, Eric and I together, where it's very limiting on giving a lot of free money away from people that are participating, and high management fees, and we just basically eliminated all of that. And we're like, look, we're going to do this what we think the market is, or what the market should be. But no, we've seen a lot of them that have just absolutely done poorly because of they're just scraping fees, scraping money early on from investors, whereas the ones that are thinking more long term, I think, are going to be big winners. So yeah, I mean, look, we also at Canary, we invest in a lot of DATs. We probably invest in 20% of the ones that we see, because once we see, oh, we're paying the asset manager 5%, we're like, we're out. 3%, we're out. Oh, look at these massive warrants that we're paying, we're out.
Yeah.
But those are some of the biggest questions that we ask, and So there are a lot of good ones out there, and I think those are going to be the ones that are very successful long term. But you just have to avoid the bad ones, as with anything.
And to tie these things together, if we do have staking yields coming down, and we have these fees that we have, that these DATs are paying these advisors, at a certain point, we're going to find an equilibrium here where it's going to make the mNAV either positive or negative if you extrapolate this to the long run. And so what you're describing is that by keeping those fees low, even if we have some staking yields compress, there's still some clearance there where the advisor gets paid, the holders of the DAT and the ETF, they still get their room and they can get their yield, and the operating company can remain profitable even as they're operating and they're running these validators and they're collecting this yield. And that is what you're saying makes a good DAT different from a bad one.
Yeah, that's exactly right. So look, I look at the Treasury as the Treasury. It'll fluctuate in value. You just have to you just have to understand that. It's no different than in my past when I invested in emerging market bonds, right? So there might be a company in Brazil that its balance sheet is Brazilian real, and you know that it's going to fluctuate against the dollar, and you just have to understand that that's the case. But regardless of what the Treasury does or the balance sheet does, there has to be income that's earned. And that income, if operating costs exceed that income, then it's a bad company. If operating costs are underneath the income, and then it's a good company. I mean, it's really basic stuff here. And a lot of these DATs out there, they might have, like an Ethereum DAT, for instance, that yields 3%, and then they're paying their manager 3%. Well, how do you cover the rest of the operating cost if that's the case? So those are some of the analytics that we're looking at when we're deciding on what to invest in and what not to. So as long as the staking yield or other types of operating activities exceed your expenses, then the company's profitable and it's going to continue to grow.
Yep.
Yeah. Yeah, go ahead, Andy.
Yeah, just one thing that you said prior was about the nature of some of these companies. And so I'm curious, when you guys went to build Injective's DAT out, right? One of the things that you mentioned about strategy was that it's basically its entire operating business is more or less just accumulating Bitcoin now and issuing debt. And a lot of these other DATs, that the businesses which they were prior, things from like whiskey businesses to like furniture to other kind of financial services, very kind of broad scope. How did you guys form Injective's DAT such that you guys were able to ensure that there's longevity with this while being able to, run the accumulation strategy? Because I mean, I don't mean to like send fear down our spines here, but I do feel that there may be some issues in the future where it was very clear that these companies didn't actually have an operating business, and that, whatever happened with the DAT happened, and there may be some scrutiny or pushback. How do you guys avoid that? What structure did you guys kind of follow and orient around to make sure that in the future you guys steer clear of any issues?
I think first of all, one truly aligns with basically like what Injective is about and what the space is about. And luckily enough, I think Pineapple Financial is a mortgage underwriting business which has a very, very successful presence within Canada. And also coincidentally, it's also one of the largest underwriters, which could have a lot of synergistic nature of it with the overall blockchain ecosystem. And this is, I feel like one of the most important things that was like oftentimes missed by a lot of the DATs out there.
Yeah.
And then second of all, it's about having like a good management team, a management team that's like there to ensure the longevity of both the ongoing business and also for the overall DAT strategy. And it's about being long-term aligned. It's about having a very much a long-term minded incentive structures. It's about basically structuring it in a way where like not short-term minded, where it's not a one-time payment and then they're free to do whatever they want. So I think all these like factors come in together to make sure that first of all, like this whole offering is extremely clean, it's non-extractive, it's long-term minded, it's about having the best possible like treasury representation of both the INJ ecosystem and be the best representation of like their ongoing businesses. And yeah, like we're very very excited about like Pineapple Financial, obviously, and how they kind of like took like a leap of faith and like believe in us as well. And we are obviously like very very picky when it comes to uh, um, standing behind like a certain firm that's decided to adopt this strategy. So we've done a lot of like research and background, and we just think that they are probably like one of the most promising firms out there that are looking to adopt stat.
Yeah, I appreciate the candid answer, Eric, because I know it's kind of a pointed question, and I do think there will be in the next 18 months we will see scrutiny amongst some DATs. Steve, I don't know if you had anything to add there. Again, I know it's a touchy subject.
Yeah, look, I mean, it's not touchy at all. I think it's going to be even sooner than that because I mean, we've seen so many deals where, again, and I hate to like just kind of blast all the other deals out there, but but there are some where it's like this operating. I saw one where it was like the operating company has about $500,000 left on its balance sheet. It's burning $2 million a month, and they're like, "Yeah, we need a DAT. We need a DAT." And it's like, crypto bros, bail us out. We're about to go bankrupt. That's really how it feels, and you could tell, like, right off the bat. So I mean, first thing we look at is the P&L, and it looks like it's a company that's just going, just straight down in flames. It's time to back off, because usually what that means is, let's say you raise $100 million treasury, they're going to take 10% of that just to bail themselves out and try to keep running the operating company underneath. And that's not a good situation at all. You want most of that treasury staying in the treasury. And,
yeah, of course.
I mean, that's the whole purpose of this thing, right? So, but yeah, no, I mean, I think there's going to be a lot more scrutiny in the coming months. Not even a year out, but
yeah,
even by the end of the year. And I think some investors are going to look at deals that they're in and realize that it was a bit of a stinker, and try to try to get out or take other action. So that's one of the most important things of when you're dealing with a public company is, I mean, you've got to you really have to operate it well, because all eyes on you and you're all of a sudden transparent. So I mean, that's going to be very important to us, and that was very important to us when we were getting into whether investing in some of the DATs that we're investing in, or being involved more directly in a lot of other ways. That's a very important place to be in.
Yeah. Steven, last question for you. Just a couple hours ago, the NASDAQ approved SOL Strategies to get listed. They had previously said that they were going to start to scrutinize these DATs a little bit closer and make sure that they had a lot more legitimacy around them. But then they come out, and they approve the SOL Strategies one. Just want to get your reaction to that approval.
Yeah, I actually just saw that coming across the ticker as well. So first of all, big congratulations to my old friend and former colleague 𝗵𝗶𝗴𝗵, who's the CEO over there. We've been friends for a long time and built companies together. So big congratulations. And I think that's warranted too, because SOL Strategies was the first SOL DAT up in and they were up in Canada, and they were really the first ones to take that risk on SOL. And again, part of their business is running a Solana validator. I mean, that's the business of the company. They're running a validator, so it's not just their own SOL that they're staking. They're staking other people's as well, and they have a quite a large community that they're staking. So that's a tremendous business. It's not just 7% of their treasury. It's way more than that. So to move that over to NASDAQ, I think is a really big accomplishment, and I believe they'll be extremely profitable through their validator activities.
Amazing. Eric, also just want to give you a chance to sign off, man. Where can our community find you? How can we get involved?
Yeah, absolutely. So follow at Injective, or follow me at Eric Injective. And honestly, I think the best starting point for the overall Injective ecosystem is honestly Injective.com. We spent a lot of time revamping and making sure all the information is there. And yeah, like definitely, stay tuned. I think we have a lot of very exciting stuff coming up, especially with EVM mainnet, et cetera. We already had to deal with a lot of activities that are coming in from the testnet, even though it's supposed to be a very, very short testnet period. So that's been what we've been very, very excited and busy with.
Yeah, yeah, awesome, man. And wish you the best of luck through Steven's firm with Canary. Again, I mean, Steven's timeline was the highlight of my questions today. If this plays out, this will be happening sooner than expected. We could see 20 to 50 crypto ETFs pass this year. One of them being Injective, hopefully a staked Injective ETF as well, Eric. Also, Eric, I just applaud you on your journey, man. I also dropped out of university fully, 6 years ago, and just have been bootstrapping businesses online, and kind of Rob and I have grown this one together. And yeah, going from dropout to millionaire, to ETFs, to crypto, to institutions, to growing up in different things, and just kind of having your own journey is it takes a lot of grit, and also just willingness to be embarrassed. So I know what it's like to just kind of be like, take the other path, and hope you're glad that you did. Steven, appreciate your time as well. Would love to have you guys both on in the future again, talk more, and kind of see where we're at in a couple months.
Thanks for having us.
Thanks so much.
Alrighty.
See you next time, guys.
See you next time,
Thanks
gents.
again.